Now this week, two chief executives of major oil and gas companies called out the Victorian Government in particular for gas shortages, which they say will cause problems for at least a decade. The Victorian Government in future will rely on gas being piped from Queensland, despite the fact there are significant unexplored gas provinces in the Gippsland Basin in Victoria. Exacerbating the issue, the amount of gas flowing from the Bass Strait fields is expected to halve over the next 3 years. Well, this week, after she made that big call, I caught up with Woodside Chief Executive Meg O'Neill on the sidelines of an event at the Melbourne Mining Club.
The main point I was trying to communicate is the importance of affordable energy to economic prosperity and the role of gas in providing that affordable energy to customers here in Australia.
OK, so bottom line of that then, you have a lot of gas on the northwest shelf. You've got a new project, Scarborough, coming on. You've got, liquefied plants with Pluto 2 coming on board. What stops you from sending gas from the west coast of Australia to the east coast?
Look, it's probably worth starting with our investments here in the east coast. We're a partner with ExxonMobil in the Bass Strait joint venture, and all of the gas that comes onto shore from those fields is provided to local businesses, power generators, and households. So we already are a player here in the East Coast gas market. But the concern we have is those offshore fields are now in decline. It's a finite resource, and as the resource starts to decline, we're already seeing the signs in Victoria of energy shortfalls. So there was a point in time a couple of years back where gas was in high demand. There were outages in other systems. There wasn't a lot of sun, and gas came to the rescue. The worry that I have is that with the decline in the natural fields, if we don't get something else to the market, there'll be some real challenges here in Victoria.
OK, so there'll be challenges in Victoria, potentially up the east coast as well. Isn't one of the answers to go to one of the world's greatest gas resources in Western Australia and to ship that gas to the east coast? Is that not one of the answers?
That is absolutely feasible. It's something that we've been looking at. It's something we've been working with a couple of companies here on the east coast to see, is it going to be feasible to bring LNG from the west over here to the east coast market? Because the market's going to need the gas. I think that's very clear. It has been challenging to get approvals for developments here. And, it's fascinating. The big gas sink is in Victoria, but getting permits even for floating regas facilities, which is a fancy name for a boat that's tied up at a quay to offload gas and then warm it up and put it into the grid. It's been very difficult to get those approvals. So that's something that we're keen to continue to work with other industry players and the government to get approval for.
OK, so
but the bigger opportunity, Ross, is to figure out how do we unlock investments in the gas potential that is here in Victoria. And you almost need to start with getting the policy settings right, doing things like getting rid of the moratorium, and making sure that the government is voicing support for continued gas investment.
OK, so then let's go back. Yes, you're right about gas beneath your feet. That is quite clearly the cheapest source of gas, close to the pipelines, get it into the grid. But if it has to be that the gas has to come from the west coast to the east coast, what happens in regards to the pricing? Because a lot of gas is priced at international parity prices, which is higher than the domestic gas prices, which quite clearly means that industry would not buy that gas simply because it's too expensive.
I might frame it a little bit differently, Ross. So think about the complex reality of bringing gas from the west of Australia to the east coast. You have to produce it from the fields, and there are offshore fields. You have to bring the gas onshore, process it through very expensive infrastructure. And to give you a bit of calibration, the new LNG facility we're building at Pluto costs plus or minus $6 billion US. So that's not cheap. And then you have to put it on a ship and move it around. So of course, it's more expensive than the gas you're standing on. There's so much investment required to be able to take the gas that comes from WA, process it, and get it here. Of course, it's more expensive.
I get
now, is
that.
it linked to international prices or not? That'll be a commercial matter for the parties involved to discuss.
Okay, so then you get to the other point though, is that if the gas becomes more expensive because either it's not being drilled or indeed it's more expensive to bring from the west coast to the east coast, isn't that counterproductive to Australia's competitiveness when you've got a president in the United States right now who's got a policy of drill baby drill and wants more projects and cheaper energy in America as compared with what it would be here in Australia?
Yeah, and Ross, that's the thesis of my speech, which is energy is essential to economic prosperity. And in a country like Australia, similar to the US, you're going to need a wide range of energy sources to meet the needs of consumers, households, and businesses that want to grow. The US is a great example of an economy that is developing all sources of energy. It's got oil, it's got natural gas, it's got solar, it's got wind, it's got nuclear. You know, everything is in the mix. And Drill Baby Drill does two things. One, it's very clear support for oil and gas. But two, it's also a message saying that energy, more energy in the market keeps prices down, which enables other economic growth. And that, I think, is the most important message that we can all take away from the Drill Baby Drill headline.
Okay, so then you've got a federal government that has just shelved, the Prime Minister has shelved the nature positive legislation, which would have added potentially another layer of bureaucracy. Even though the Environment Minister, Tanya Plibersek, says it would reduce bureaucracy, the reality is it would be another agency to have to deal with to be able to get gas projects up and operational. So, for example, your North West Shelf extension project has taken 6 years to get approvals. But the problem is we don't have 6 years to wait before these gas shortfalls, especially on the east coast of Australia, before they occur.
No, we don't, and it really does make the head spin. So North West Shelf is a facility that's been producing domestic gas since 1984, producing LNG since 1989. The existing environmental approval is till 2030, and we went to the government and said, look, we just want to increase it to 2070. We're not changing anything in our footprint. We're staying in the same fence line. It's the same equipment that we've been using for decades. It's taken 6 years for the state government to give us approval. And now we also have to get Commonwealth government approval. So it just makes your head spin that you've got two independent regulatory agencies making a decision on the same question, which is just extending the life of something that's already been running for 30 years. It's crazy.
So you, of course, have choices to where you invest capital. You and I have talked about this a lot. You have now operations in Africa. You have operations, obviously, in Western Australia. You've got it in the Gulf of Mexico. You've got it in the United States. You go where you get best bang for your shareholders' dollar and where the resource sits. That's a big thing for Australian shareholders, but even for the Australian government to try and get its head around, surely. When we're thinking about where to make our next investment, we look at a number of factors. First and foremost, we look at, is the resource there? We don't have the luxury of building wherever we want. We have to go find the oil and gas fields and those opportunities. Second thing we look for is, what's the investment climate? And that goes to, does the country really want our investment, want us investing in these commodities? What's the tax structure? What's the wage structure? What's the supply chain cost? What's the energy cost? So those are all factors that we look at. Look, we're comfortable and, we're a proud Australian company. We've made a decision to invest in developing the Scarborough field. We would love to be able to invest and develop the Browse fields, again, and continue to supply gas to our customers here, particularly in Western Australia, and then also our LNG customers. And you look at the US and you'd say, well, actually the US is probably ahead on a number of those metrics. Tax rates lower, employment model is a bit more affordable, supply chain is cheaper, you've got a big contractor community, so the US is very competitive. And again, it was another point in the speech I made, is that we're in a globally competitive world. Australia has been very successful in the past, but we need to always be upping our game and improving our performance to make sure we stay competitive. Meg O'Neill, it's always great to chat to you, and many thanks for your time today.
Thank you, Ross.